Okay. Okay. Nilesh Jain of Centrum Broking also joins in the conversation. Nilesh, good having you. Thanks for joining in. We have a sluggish start today, and it's been a bit, how do I say, iffy the last couple of days. What's your sense on what should the trade be this morning on the benchmarks?
Morning, Neeraj. Morning, everyone. So yesterday we have seen a bit of a follow-up move to what we saw earlier on Tuesday, a kind of a reversal formation which resembles a shooting star kind of candlestick formation. That is a bearish reversal pattern. So after rallying for the 6-7 consecutive session, we are expecting some pause in the trend. Today being a monthly of an expiry for the Nifty and Bank Nifty, when if you look at the derivative data, yesterday we have started witnessing unwinding of the position from the 23,500 put strike towards the closing hour. That itself is giving some bit of idea that we may see Nifty inching closer to 23,450 to 23,400 in today's trading session. But we are expecting a kind of a muted expiry, I would say, in the range of 23,400 to 23,600. That's the tight 200-point trading range for the Nifty. Expiry could be seen somewhere around 23,500 plus or minus 50 point. But if at all we see any dip in the morning session, I think that should be bought into with a stop loss below 23,350. There are high possibility of a pullback coming in from the lower levels. And on the contrary, if at all we see on if we see any opening on a gap up note towards 23,550 to 23,600, that might get sold into. So more sort of a consolidation is something that we are expecting. Both sides of trade can be seen. Bank Nifty, on the other hand, which witnessed a follow-up move similar to the Nifty yesterday, but it is inching closer to its 200-day moving average, which is placed at 51,000. So 51,000 is the strike as well on the derivative data, where we have seen a fresh put writing as well. So that's the important level to watch out for, at least in the morning hour. So the focus should be on stocks rather than index, because today being expiry, the markets are likely to remain slightly volatile.
You said it, and on the topic of the Bank Nifty, the bank that moved very sharply yesterday on the large cap side was HDFC Bank. It turned quite dramatically, right? I'm just wondering what you make of that move, and what is a near-term trigger for you for HDFC Bank and maybe some of the other large private sector banks as well first, and then could you also tell us what your picks are?
Sure, Alex. So first of all, HDFC Bank, it's a buy on dip. So yesterday we saw some bit of profit taking. It has witnessed a sharp up move in last 7 straight sessions from the levels of 1700 all the way to 1830, 1840. So this is kind of a retracement that we are witnessing as of now. It's a buying opportunity. If at all you see any dip towards 1790, 1785, these are the good levels to make a fresh entry. Keep a stop loss below 1745. This is the bank, HDFC Bank, one of the heavyweight, which is trading well above its all long-term and short-term moving averages. So our short-term target is intact at 1850, positional target at 1900 plus. So it's a buy and dip. That should be the strategy. Apart from that, other banking names like Axis Bank, a similar kind of profit taking was seen yesterday. Again, it's a buy and decline. And Kotak Mahindra Bank, which was trading at all-time high, this particular stock is also witnessing some profit taking, or I would say retracement from the highs. So buy on dip in all these 3 stocks if at all we see any further dip. So I have one buy and one sell recommendation, balance approach that we are keeping. So VBL, first of all, this particular stock is a buy. Yesterday we have seen a good build up on the long side, and good rollover data can also be seen as far as April series is concerned. So it looks good for a follow-up move to continue on the upside towards 545. Stop loss should be placed at 516. Apart from that, one sell recommendation, coincidentally, is Tata Motors that you were just mentioning. So we have seen this particular stock has been one of the underperformer within the auto space. We have seen a good decent pullback recovery from the lower levels, but now there are possibility of some bit of profit taking to continue all the way to 690 or 680 on the lower side. So till the time it doesn't crosses above its recent high that we saw on Tuesday of 721, so that should be the stop loss, and one can play Tata Motors on the short side.
All right, we're joined by Shrikant Chauhan of Kotak Securities this morning as well. Shrikant, good morning to you, and as I understand it, you're also relatively cautious in the near term based on the kind of moves you've seen over the past couple of sessions, and you're expecting there to be a little bit of muted trade in the near term, right?
Yeah, good morning, Alex. Yeah, absolutely. I think this market is is going to take some pause ahead of the major announcement, which is on 2nd of April. Also, if we consider the technical structure of the market, then we saw spectacular recovery from the lows. It was around 21,900 levels. From there, all the way, we saw the levels of 23,900 in just 13, 14 days, which is remarkable and which is something going to help the market in the medium term. But in the short term, because of this extended rally, we are expecting some correction in the market. And yes, we may even see the levels of 23,300 or 350 in the near term. I mean to say either today or tomorrow. But broadly, I am of the view that instead of creating any short positions at these levels, it is better if we look for taking some contra bets close to 23,300, 350 levels. And on the high side, again, we could see the levels of 23,750 or 800 levels.
Got it. Okay. Shrikant, so in light of that view, what are the ideas for this morning from your end? Let's get that out of the way first.
Yeah, see, like in this rally, we saw specific buying interest in BFSI sector, and also because of consistent fall in the 10-year bond yield of India's, we saw a specific buying interest in public sector enterprises as well as PSU banks. So I'm of the view that again we should look for keeping more our specific buying interest on these particular stocks, as well as we should look for taking out trading ideas out of these particular sectors. So in that specifically, we like Power Finance Corporations, which is around 410 levels. It was around 430-35. From there all the way it is at 410. And now it is very close to its support area between 410 and 400. So between these levels, look for taking some contra bets of creating long positions with a stop loss at 395. And again, I'm expecting stock to move towards the levels of 440, 445. So PFC looks good. Also from the defense basket, we like Mazgaon Dock, which is around 2640, 45 levels. There I'm seeing some consolidation sort of activity, but at the same time, it's a continuation to the previous up move that we saw. So again, we could see the levels of 2750 or 2850 sort of levels in the near term. So it's a buy at current levels around 2640 with a stop loss at 2590 on the downside.
Okay. All right. So Mazgaon Dock and PFC, we'll keep those on your radar as well. Shrikant, thanks for that. Let's go to an interesting story in the context of everything that's happening on tariffs and trade tensions, so to speak, emanating from the US. India's ongoing trade talks with the United States seem to be progressing well, with both the sides working towards a resolution that could significantly impact bilateral relations, according to an official source. That official source spoke to NDTV Profit, and according to that source, India Inc. is seeking government intervention on potential consequences of reciprocal tariffs that may arise if the negotiations are not concluded swiftly. My colleague Rishabh has more details.
Right. What we're hearing from official sources is that the ongoing trade talks between the India and the US are progressing well, but there is paranoia among the members of the Indian industry on how the potential impact of reciprocal tariffs, which could be coming in force within about 5 days from now, from April 2nd. There is paranoia on how it could negatively impact the industries. The Indian industry is also very paranoid about the impact of job losses that could be happening. And thus, they are writing to the government with the request that the government either protects them from the impact of the reciprocal tariffs or seeks an exemption from the US with regards to how such a tariff is imposed. What we're also hearing is that on how reciprocal tariffs might impact the Indian industry is that there might be job losses also at stake. And so therefore there is pressure to seek an early conclusion of the ongoing trade talks with regards to the bilateral trade agreement that is being currently negotiated for. Remember, there is a September deadline for the first tranche of it, but we have a much more early deadline in terms of April 2nd that is coming in. So all eyes on that deadline, which is in about 5 days, which is when we'll know if India has been able to secure an exemption with regards to the reciprocal tariffs that the Trump administration has constantly used as a threat in terms of lowering tariffs.
Got it. All right. So that's the update, and let's see how that pans out. I'm sure that a lot of governments are talking to the US right now and trying to hash out deals before that April 2nd deadline. But Avinash, I want to come back to you on a couple of stocks that we spoke about earlier today. One of them, of course, Trent, and we were speaking about the implications of the aggressive store openings that they seem to be doing, and the other is Avenue Supermarts. What do you make of these two? And there's also an expectation in certain quarters that a pickup in economic growth in consumption is already underway. What do you think about that?
Yeah, I think Alex, as far as both Trent and Avenue Supermart are concerned, I think Trent appears to be quite promising. Our ground level research has indicated that Shein is not going to be a very big threat for Trent, which was earlier perceived to be. And I think the kind of store opening which Trent has done is very aggressive. The kind of price points Zudio is offering products, specifically in tier 1, tier 2 kind of markets, is definitely going to help them increase their volume share. Most importantly, I think the market is also quite large to accommodate all the players. But I think people are more comfortable with the brand, with the pricing. So typically, maybe for the next couple of quarters, there could be a little bit of pressure on the margins. But I think in terms of the volume growth, Trent appears to be quite promising. So I think, even at the current odd level, somebody wants to take a longer term call and wants to add Trent in the portfolio. We are quite positive and constructive on the stock. As far as Avenue Supermarkets is concerned, I would say it's better to hold for maybe a couple of quarters. Definitely, there has been some slowdown in the business. Clearly, valuations are also not cheap. I think trading at around 65 to 70 times 1 year forward numbers. So I think here the risk reward could not be significantly high. So I think probably on a slightly more market decline, it could be added on dips. But at the current level, Avenue Supermart is a hold from our side.
Okay. The other one is Reliance. Because oil upstream or oil prices have done so well, can oil upstream recover? And the kind of selling that we've seen in Reliance from FPIs and MFs and the underweight position currently is interesting. Shrikant Chauhan, any thoughts on Reliance? Is there any kind of a bounce possibility?
We saw a very strong rebound from the lower levels. But at the same time, at higher levels, I'm not expecting stock to continue the current up move so easily. So broadly, we are of the view that the stock is going to remain within the range of 1350 and maybe 1200 on the downside. That's the view. And because the rally in the market, we are seeing supportive sort of buying in the Reliance. But to sustain above the levels of 1350, we need some solid results. So in case if there is any correction close to 1200 levels, then only we should look for taking some bets. Otherwise, it is better to focus on some other stocks.
Okay, and some other stocks, Nilesh, is the focus, rightly so. I just wonder if OMCs, which were touted to be big beneficiaries, is there a technical short-term downside there?
Yes, absolutely. In fact, HP, BP, IOC, all these three stocks for the third stage session are witnessing some bit of profit taking, specifically BPCL, where we can see a double top kind of formation. So all these three stocks are looking slightly on a weaker side from a short-term point of view. Better avoid taking any contra bet, and a follow-up move of another 1 to 2% can be seen.
Okay, Nilesh, on that note, thanks so much for joining us this morning. Pleasure speaking with you as always. And gentlemen, do stay with us. We have to take a very quick break. Viewers, we'll be back on the other side to talk about market open. Of course, we're just a few minutes away. And there are more stocks, of course, that we have to tell you about. So do stay tuned.